Okay. Are we live? Yes, we are live. So let's see what kind of damage we can do. Guys, my name is John, going by Blind Johnny here, and what you're seeing on the screen, these are my first deposits into my investment portfolio. So my very first deposit was only $10, and that was last year. That was actually when I opened my first investment account, and I only put in $10, that's all I had, and I used it to buy one stock. And I actually set all of it aside, and I forgot I had this for almost a year. And when everything got crazy this year, and everyone started losing their jobs, everybody had to start staying at home, everybody was lost in this surreal place because of this thing we never thought we would ever have to live through. Well, I went back to this account in Robinhood, and I was a little surprised because the stocks that I had, I only had two stocks. One in Sirius XM Radio and one in Ford. That $10 deposit I made just to buy one share of Ford. And I never went back to my portfolio. What I did not know at the time was that Ford, for that one share that I had, was also paying me what's called a dividend. And I was getting 15 cents every quarter for that one share that I had. And yeah, that doesn't sound like a whole lot. But just think, if I would have put $10 into my account when that Ford stock did cost that much, when we didn't think that everything was going to take this crazy nosedive, and if I would have started putting in that same $10 every week and just getting another share of Ford, or even something else after understanding what a dividend was, then that 15 cents would have been for each individual share. That would have been for each one that I had. So in 1 year, that could have been 52 shares that I could have bought. And yeah, I wouldn't have been getting dividends for all 52 the entire time because I wouldn't have had them yet. But little by little, I would have been getting more. So you figure you have to buy a stock somewhere within a certain time frame before they pay out a dividend in order to be entitled to that dividend. So you have to remember that part too. And if I would have bought, say, something like 4 shares by the time I would have been qualified for that dividend, then that would have been 60 cents that I would have gotten. And then that just starts to pile on top of itself. And then the more I buy, the more of those dividends I get. And then I can take those dividends and put them into other stocks. And before you know it, following this kind of a process with something safe that has a dividend that is reliable, then that's what they call passive income. But we'll get to that stuff later on down the road. I have this picture up, though, just to show what my first deposits were, and I wasn't kidding. Between $20 and $60. Like I said, my first deposit was $10. It was even less than that. There's nothing that says you have to have a certain amount of money to be able to invest in stocks. Nothing says that. But earlier this year, I got more involved in researching stocks because I was stuck at home. I didn't have a whole lot else to do. I figured I could pick up a new hobby, and I made another deposit of $35. I could afford that at the time. And a week after that, I made a deposit of $30, and I just went from there. And that's how I started. Now, my investment portfolio currently, that has grown. And I can actually show you where it is right now. And this is real time. This is current. This is what my investment is in the stock market right now as we speak. Does this mean I haven't lost a little bit of money here and there? Absolutely not. What this means is that I didn't panic, I didn't get emotional, and I paid very close attention to what it is that I was doing. But when I first started, I didn't realize at the time just how haphazard my methods were. And this is kind of a project for me as well as anybody else who's going to watch. Because right now, if I look at everything overall, and yeah, there's this huge flat line here. That was the time that I wasn't using my account because I forgot about it. So all of that right there was the time that I was not investing that I could have been. And that was the little point where it kind of got low. But it's showing that I had a gain because I got that first stock for free for Sirius XM Radio. Now, when I actually started putting money in, you can see that there was a pretty steep incline where I was able to make some pretty significant gains. And I'm going to revert back to that initial method starting on Monday to show everybody that you can do this with just a little bit to start. And all you have to do is start. So, before we can get into all of these things regarding stocks and trading, we need to prepare ourselves because we have a responsibility to ourselves. And I'm going to show you guys right here. You should be able to see my portfolio. This is that steep incline that I was telling you about. And this has been the last month for me. And what you'll see here is that I've lost almost $300, about $280 currently. But I will be completely honest with you when I say I am not worried about that right now. And I will tell you why starting on Monday. Today, what we're going to do is we are going to look at some tools that will help us prepare for those particular events. So, what I have here is a budget calculator from a lending company called One Main Financial. Now, this is a wonderful tool for you to figure out what your budget is, because the first thing you need to do before considering any kind of investment is you need to understand the money that you put into investment, you have to be willing to lose. And we have to remember what our financial obligations are, and we have to understand those come first. There is no compromise on that. We have to take care of our financial obligations before we can start looking at where we can put our other money. So, if we say our regular net monthly household income, as this is here, if you get paid bi-weekly, go by 2 paychecks, is what I would say. Don't go by all the paychecks that you get in a year, because there's 2 months out of the year that you end up getting a third paycheck if you work bi-weekly. It's really nice to budget yourself based on those 2 paychecks that you get. So when you get that third paycheck in a month, you might be able to do something different with it. Or you might be able to get ahead on some of your financial obligations to try and pay those down earlier so that you have more coming in that you don't have to send out. Those are going to be very, very important things. And if you're wondering about my background, what I've got here is my adopted kitty named Happy. And oh, he's definitely something else. He decided to explore the dishwasher, and I was kind of tempted to close it and turn it on while he was in it, but I refrained. So what we're going to look at, though, is this budget calculator to begin with. And we're going to use some really conservative numbers here just to set an example. I am fairly certain I don't have anybody really tuning in right now. We're going to use some really conservative numbers here. I could be wrong. Just to set an example. But I think I am not. Which is fine. This video will be available at a later time. I'm not going to delete it. And the link to this budget calculator is going to be in the description of this video. So, we're going to look at some very, very conservative numbers here. So, we're going to say our monthly household income is only $1,200 a month. Okay? And we're not going to look at tips. We're not thinking on that particular front. We're not going to look at bonuses. I can't remember the last time I got a bonus. I don't have alimony. I don't actually know how alimony works. If you are in a position that it applies to you, don't forget to add that value. And then we've got other, just in case, you know, you have anything coming in, cash in hand, or whatever the situation is. And then we're going to look at our monthly expenses. Okay? So if you are only making $1,200 a month, like I said, that's a very, very conservative number. That's a very low number. And for rent alone, rent can be pretty vicious. I'm going to be optimistic on this value here, and I'm going to say $450 a month for rent. So we're also going to bring up a WordPad here so that we can kind of keep track of what we are evaluating. And what we're going to say here is we're going to think of our utilities, and water, sewer, trash, maybe $15 a month. And we're going to think of our electricity at, let's say, $120 a month, especially since we're moving into the summer, the hotter days, air conditioning. Those prices can go up, and these are some things that we'll talk about too. So now, let's say cable, internet, because we can't do a whole lot of any of these things without internet. And we're going to say that is $75 a month. So we want to actually put all of those values together so that when we get to our utilities here, I'll just go ahead and go there. And like I said, we're going to pay $120 to electricity, water, and sewer. We got $15. Heating oil or natural gas, I actually have no idea what those values are. So the electricity value that I have here, I am hoping that would be offset by that gas or heating oil type of expense. But just so we have a value here for anybody who does have that kind of an electric bill and also has to pay gas, let's say, I don't imagine we're going to need a whole lot of gas for heating during the summer, but let's say we have to pay $25 for gas. Now, loans and credit cards. These are things to consider for sure. And we're going to think about a person who only has one vehicle. We're going to think about somebody who has a car payment of, let's say, $170 a month. And car payment 2, I'm actually going to use this for insurance. So for insurance, we're going to say, how much? If we had something that was just, not too old, not too new, and we only had, if we had car payment, then we would have to have full coverage, right? We would have to have full coverage. Depending on your situation, that can be pretty expensive. So we're going to say $120 there for full coverage on a vehicle that we are making payments on. If you have a personal loan, that's very possible, especially today. How many times can you defer those payments, though? Not often. How many times can you get those payments reduced? Not often. So we are going to look at personal loan amount here for a monthly payment. Let's say we had some type of a loan and we had to pay $100 a month towards that loan, and it's an interest-bearing loan. So most of that's going to interest, we already know that. So it's going to take a while to pay off. But credit card. Now, when we talk about credit cards, they only have 2 slots here. What I recommend for anybody who has, 3 slots. What I recommend for anybody who has multiple credit cards, think of all of your credit cards, gather all your cards up, and figure out what their due dates are, and make a spreadsheet. Like, I have a Capital One credit card that ends in blah, blah, blah. So I know that specific card. And that's going to be due on August 3rd. And the amount I need to pay for that is a minimum of $72. Because it's maxed out and it's a $2,300 credit limit. And I've got another Capital One card that's blah blah blah. So I know which card specifically is due on that day. And that one's due August 8th. Oh no, I fibbed. It's the 7th. But that minimum payment on that card is only $25. Now that's the minimum payment. I'm going to make a little bit more than the minimum payment there. So I've got a $72 payment and a $30 payment. So if you have multiple credit cards, I would recommend making this kind of a spreadsheet just so you can keep track of when those bills are due and updating it as you do so. So when I make my payment on this card for August 3rd, I'm just going to go over here and I'm just going to update the month so I know how long until that's due again. I do this personally just so I can stay on top of myself, and I check it weekly to see which bills need to be paid the soonest. And this way I can avoid my late fees, I can avoid anything from becoming delinquent, and as long as I update it regularly and check this against my payments, when I make a payment, I'm immediately going to that spreadsheet and I'm making that update. That works for me. I don't know if it'll work for anybody else, but it's just a piece of advice. Now, the things that I'm bringing up right now are some very basic personal financial readiness types of things, but I'm not a financial advisor, and I don't claim to be one. So if you have a financial advisor, work with them in order to find out what works for you. Find the tools that are going to help you. Now, I found this budget calculator because I do have a loan with One Main Financial. So having a personal loan amount here is only right for this kind of a budget calculator. So if you do have multiple credit cards though, and you have more than 3, take all your credit card values, whatever it is that you owe every month, and add that total together. And you could just use that one total to fill in one of these spaces and say your total amount for your credit card payments comes to $250. And you could just fill that one spot, or you can divide it up and you can have that 72 there, that 30 there, and we'd have 148 here, if my math is right. I believe. Yep, that's right. Now, if you have student loans, I don't know what that situation's like. I personally have actually never had any student loans, so I have no idea what those payments might be like. However, this is for your due diligence, so whatever values are appropriate, make sure you're filling them in according to those values that you actually do owe. It'll help out being honest with yourself. And our trash service, where I live, my trash service is actually included in my water bill. So lawn services, I do my own lawn. For my phone, I actually have a cell phone. And for myself, just having one phone, because I just maintained the same account for so long, actually only comes to $80 for me by myself. And again, this is going to be a particular type of situational based calculation. You know, it's going to depend on each individual person's circumstances. This is not true for myself any longer because I do have a family plan. I do have somebody else that's on my cell phone plan. So things like that can change. If you owe balances on your devices, then consider paying off your equipment as soon as possible. And you're making additional payments for equipment specifically and trying to reduce that from your bill because it does incrementally reduce your monthly payments on your cell phone bill when you start paying off your equipment with whatever it is that you can put together for that as well. So for our cable, we went ahead and said we were going to spend $80 a month on that for our internet and service. Well, that goes here. And transportation, you do have to take into consideration your fuel cost. How much are you spending on fuel? Here lately, fuel prices have been down, which has been really great if you had a need to travel, but most people don't have a need to travel, which has resulted in these lower gas prices, which is unfortunate. We can't really take advantage of it, can we? Oh, I wish I could. But we're going to be realistic as far as what the world was and not what the world is. And weekly, me, myself personally, I could count on spending between $50 and $70 a month on gas. Vehicle maintenance, you need to take into consideration your tire rotations, your oil changes, your basic vehicle maintenance. So we need to divide that up, though, so that it's a monthly cost, not, oh, well, I need to calculate the value of my oil change every time I get it. Well, no, because that's every 3 months or every 3,000 miles or 5,000 miles, whatever type of oil that you use or whatever your manufacturer recommendation is. So think about that particular aspect and divide that. So it costs, for me, roughly about $70 for an oil change. And if I divide that by 3, say about $25. And whatever I can do myself, I do myself. I can rotate my tires myself. It's not easy, and I have to dedicate some time to it, but I can do it myself. I've got a floor jack, I've got jack stands, so I can do that myself, and that helps me save a little bit of money there. And public transportation, I don't know if that would apply, but if it does, by all means. And then you have your other categories. Now, we also have to think about insurance. Renter's insurance for me was about $60 a month. Car insurance, like I said, I put in car insurance at that car payment 2 area. Now, life insurance and other, the original value that I'm talking about here is take-home pay. So if you have those insurances provided by your employer, if they are offered by your employer, absolutely take advantage of those as soon as they are offered to you. Those are typically what's called a before-tax deduction for your insurance, your major medical, dental, vision, life insurance, long-term disability, short-term disability, those tend to be after-tax deductions. But remember, if it's an after-tax deduction, that means that you are paying taxes on that premium for a short-term disability or a long-term disability plan. And that means if you have to file a claim and they have to pay you under that policy, you already paid taxes on the premium, so you don't owe taxes on what you get from that claim. So, keep that in mind. And That we're going to leave blank. Now, other, we're going to leave that blank just because I don't know what to put in there that I haven't already touched on for the most part. Um, Healthcare and medical. Now, this is also going to depend on whether or not you have these kinds of things provided by your employer or if you have it provided by anybody else, a family member or anything like that. So, at your discretion, just again, make sure you're honest with yourself about what these particular numbers are. And it'll help you get a better perspective on where your budget needs to be. Now, I do have medications that I have to take. I currently do not have insurance. That can be incredibly stressful. However, there are resources available for anybody in that kind of a position, like Good RX, and that helps to reduce the cost tremendously for having to pay out of pocket for medications. I'm fortunate that my pharmacy does support that and they do accept that. Now, with that, my monthly cost for medications runs about $50. And then food and entertainment, groceries. Yeah, groceries. We don't really think too much about including this in our budget, and we kind of just go to the store and we make some pretty simple mistakes when we go to the store and we buy things that we just don't need. And we're going to say for groceries, for a weekly trip to the grocery store, we may spend about $90 on groceries a week. But we're going to be optimistic here and say maybe $60 a week. And then $60 a week times 4, that's $240. But what about dining out? This is where we get a lot of that fat that we end up having to pay for later on. Because we'll go out, we'll get something to eat while we're out. And fast food, it doesn't seem very expensive when you're walking in the door, going through the drive-thru, and you get that $7.99 value menu combo. But that adds up when you're doing it 5-6 times a week. And you could actually end up spending as much as $80 a week on dining out. 80 times 4, that's $320. Now, this doesn't apply to everybody. This does not apply to everyone. So we're going to take that down, especially with the kind of culture that encourages you to go to work in a rush, not pack a lunch, and then when you're on lunch break, you gotta go somewhere and buy something. Clothing, we're gonna put a big fat goose egg there. Because right now, do you really need a lot of clothes? And this is going to be the only exception when we're talking about now instead of how it was. So, miscellaneous entertainment though. Video games, movies, subscription services. How many people have a subscription to Netflix? How many people are paying for that? So after taxes, depending on where you live, what state you reside in, what county or what jurisdiction, the taxes on those types of services vary. And if you have multiple streaming services, let's say we're spending about $25 a month on multiple streaming services or entertainment services. This is not counting video games. This isn't counting console subscriptions, not counting the cost of new consoles or second-hand purchases of equipment. We're just talking about streaming services here. So let's view that budget. and we didn't plan on any savings. Now, right now, we're at a negative $820. And it's no wonder we have so much trouble and we struggle to move from paycheck to paycheck. Now, this negative $820, that's a little offset because our bills come due throughout the month. So if we get paid every 2 weeks, and we were getting paid on the 3rd of July, I already know I had that bill due for my credit card on the 3rd. I got paid on the 3rd. I paid that bill. That's going to be due next month. And then I had the other one due on the 7th. So a few days after that, I make that payment. That one's not going to be due again until the next month. And when I look at the calendar and I start counting my paydays, I have 2 paydays before I have to make those payments again. But as the month draws out and our bills come due later in the month, those kind of get pushed out a little bit further. So we're saved from this $820 and maybe just barely breaking even between those little gaps, especially on those months that we get paid 3 times a month instead of 2 times a month. That happens. And I lived like this for a long time. I was working from home. I didn't even have to go anywhere. So my fuel cost was just taken out almost entirely because I only ever had to go to the grocery store. I stayed at home all the time because I worked from home. And I also ate at home all the time. So I wasn't going out. I wasn't ordering delivery. I wasn't getting takeout. I actually just made food at home. And that alone saves so much money. If we, when we go to work, would just pack a lunch, then we could save so much money. And I will tell you, when I went to the grocery store, I went to the grocery store once a month. And this is not a joke. This is not an exaggeration. When I went to the grocery store, I spent no more than $50 for the entire month. And that $50, about $20 of that went to a case of 32 quarter-pound beef patties. And that was very instrumental in me being able to save money because that was the protein that I needed that I could use in multiple ways. I could actually get that and be able to use it for multiple applications. I would be able to take that ground beef from those patties. I already knew that each one was 1/4 of a pound. I could use that for things like hamburger helpers, sloppy joes. I could use it for spaghetti by mixing it with tomato sauce and actually using the herbs in my spice rack. And that saved me an incredible amount of money. A big staple in my diet is rice, and that is a lot cheaper than bread. And I would also get bread 2-3 loaves at a time, and I would take 1 loaf, leave it out, 2 would go in the freezer. And I would just take out another loaf after a week and a half or so, let it thaw, and that was the bread for the next week and a half or 2 weeks. And that helps to keep it fresh as long as it doesn't stay in the freezer for too long. Those are some very, very basic ways that we can cut a lot of corners and save a lot of money. Now, aside from that, I also have, and again, a link for that budget calculator is in the description of this video. So be sure to access that link, bookmark it, so that you can kind of track your budget as you move through not just this adventure, this project that we're doing, this little journey, the side quest. It's for more than that. That's for your lifestyle. That's going to be a tool that you can use for the rest of your life to help make things better financially for you. Now, you see this coming up here on my screen, I think, and that's another thing that helps me to save money. It is called Wish, and it is a widget that I have incorporated into my web browser whenever I look up anything for purchases. Major retailers, even Amazon. This comes up, and if I'm signed into it anyway, it will actually analyze what it is that I'm trying to buy or putting in my cart, and it will look for discounts that are available for whatever it is that I'm buying and apply them automatically. The same thing with Honey. Honey will do the same thing. These are some very simple tools. They are not sponsoring me. They are not giving me anything to say this about them at all. It's just another tool or resource if you choose to use it. Now, this is an article from Bank of America. And Bank of America, it's a bank. And these are 8 simple ways to save money. Now, Bank of America, remember, it's a bank. How do banks make money? Stop and think about that for a second. If you spend all the money in your bank account and you are going very close to that zero amount, or $2, $3 in your bank account, that doesn't really benefit the bank very much. They want you to have money in your account because they use that money to invest themselves. And when you spend your money, withdraw your money, keep it in your pocket as cash, that's money that they are not able to use for that purpose, and that costs them money. So if they have advice on how to save money, you can be sure it's not special interest for the method, it's special interest for them because they want you to have more money in the bank that they could use to actually invest. So one thing they have here, record your expenses. Of course, hold on to your receipts. Actually look at your receipts. Take a look at the things that you are buying, how much you're spending on them. Now, absolutely, by all means, treat yourself. If you've done very well, if you had a good accomplishment, celebrate that. But be very, very careful that you don't fall into a trap that you celebrate everything. Because I've done that before too. Now, the things that they mention here for recording your expenses, though, once you have your data, organize the number by categories such as gas, groceries, and mortgage, like we just did in a budget calculator there, and total each amount. Use your credit card, bank statements to make sure you're accurate, and don't forget any. Make sure you're reviewing those statements. Make sure you are aware of what you're spending money on. This is also very important to make sure that your accounts are not being used without your knowledge for purchases that you did not authorize. Make sure you're keeping an eye out for things like that as well. Now, they also mention here number 2 is budget for saving. This part I don't understand why they have it so high up on the list, because the first thing you need to do is budget for your bills before you can budget for saving. You can't really save anything until you actually do something to start saving. Now, let's see. Find ways you can cut your spending. This is exactly what I was just trying to say. There are corners we can always cut in our lifestyle to meet our financial goals. If you ever watched The Simpsons, there was an episode of The Simpsons where the family got pretty much ransacked for all their savings. They felt like they lost all their money. This was the money that they were supposed to use to go on vacation, and they tried to figure out how they could save money so that they could still go on vacation. And what they ended up doing, they ended up going to bargain stores. They ended up going to bargain grocery stores. Like, they weren't even going to a dollar store. They were going to a penny store. In some cases, they were buying things like canned plankton to eat so that they could afford to put money away into savings so that they could go on their vacation. And the financial advisor that started teaching them these things in order for them to be able to start saving money, that financial advisor would actually pop up and start mentioning to them how they were still being a little wasteful and how he was living off of the residual plankton in the cans that they didn't scrape out before throwing them away, because he was digging through their garbage in order to get the leftovers that they didn't squeeze out of every container, and that was how he was surviving and saving money. So, a few things that they do mention here: use resources such as community event listings to find free or low-cost events to reduce entertainment spending. We can't really do that right now, but cancel subscriptions and memberships you don't use, especially if they renew automatically. One thing that I personally like to do with subscriptions, when I subscribe to things, I have every intention of using them, and I do use them as often as I can because it is something that I'm paying for. Now, what I do with my subscriptions personally is, if there is an option available for an annual subscription, I will actually make that investment in the annual subscription because it's typically cheaper than the month-to-month. For example, one of the subscriptions that I have is somewhere in the area of like $8 to $9 a month. Annually, though, it's only $60. So $59.99 for the annual subscription versus paying that $8.50 or $9 every month, and I've already saved over $30 to maintain that subscription. But the next thing here on this list is the commit to eating out only once a month and try places that fall into the cheap eats category. I would say try to cut this out entirely if you can for a while. If it's possible. I understand completely that the restaurant industry, fast food industry, they are struggling just as much as the rest of us right now in regards to the current situation that we find ourselves in with the pandemic. And that is not a joke, and it is very serious. However, if we cannot afford to meet our financial obligations, we cannot afford to splurge on these creature comforts. But setting a particular benchmark for a once a month is not a bad idea, because at least you have that one thing to look forward to every month where you don't have to cook, you don't have to clean up afterwards, you don't have to worry about all the dishes. Giving yourself a cooling off period is what they have next year. When tempted by a non-essential purchase, wait a few days. You may be glad you passed, or ready to save up for it. So, if it's something that you really, really, really want, give yourself a few days to actually think about it. All of the things that we tell ourselves we want, that we desire, more often than not, these are things that we went without for a very, very long time already. We can go another few days. And sometimes the excitement and the allure definitely wears off, because it's not so exciting anymore a few days later, It's not as enticing anymore a few days later. It is just another thing that we don't need right now. And you'd be surprised how quickly you can change your mind about something like that when you just give it a few days. And they are right on the money with that. So, set savings goals. This is very important, and we need to start with the short term. So, they say the short term is 1 to 3 years, and then the long term is 4 years and more. So, we definitely need to make sure we have an emergency fund because life happens. And there are times where I definitely stared down a very unfortunate situation and I could not afford to get out of it. But having short-term goals like a vacation, for one, is not a bad idea. That gives you something to look forward to and it gives you something to strive for. Putting a down payment on a new car, that is not a bad idea, especially when you don't have a whole lot of income. So they have a little tip here. Set a small, achievable, short-term goal for something fun and big enough that you aren't likely to have the cash on hand to pay for, such as a new smartphone or holiday gifts, reaching similar goals, and enjoying the fun reward you've saved for. Can give you a psychological boost that makes the payoff of saving more immediate and reinforces the habit. That is very true. When you do save up for something and you're able to accomplish that financial goal, it does build your confidence. It definitely boosts your self-esteem about what it is that you were doing, and it has a incredible effect on reinforcing those good habits that got you that extra cash to get that thing you wanted. Now, we're actually going to zero in on that in just a little bit, because that's a very, very important thing for us to remember. So we need to decide on our priorities as well. Like I said, we cannot ignore our financial responsibilities right now. We cannot do that. There are instances where certain types of bills that you have right now are allowing you to take some special exception. There are a number of lenders that I have bills with that have been kind enough to defer payments for me. Luckily, with some of my accounts, I had certain protective insurances that are actually paying those bills for me right now while I am out of work. That is incredibly helpful. Very glad that I kept those particular protections because they are definitely helping me get through this pandemic and also have the money that I'm currently investing and making those particular choices that I'm making. So I'm very, very glad that I started doing that. When I started those accounts, I've maintained those types of protections for years for like unemployment insurance benefits, and having that ability to not worry about those bills in the event I ended up out of work. So we're also talking about the right tools. Like I said, that budget calculator is a tool. Use that when you can in order to reevaluate your budget, see if you're doing better, see if you're doing worse, see if you can bring that bottom line out of the red into the green. We always want to see green, right? We always want to see green. Why would we not want to see green? We always want to see something good. So, having a savings account is also very helpful because you can start a savings account, usually if you have a checking account with a bank, and you actually couple that with a savings account. That is very useful because savings accounts are where you would actually get that interest rate for return. That's where you can put money into your account and then start socking it away whenever you can and watching it grow based off of the yield on the interest return. Whether or not that's compound interest, that usually depends on the institution. So make sure you're aware of those particular aspects as well. If you have a checking account with a particular bank already, meet with one of their representatives at the bank. You have an account with them. You are a client of that bank. You can always walk into that bank and say, I want to talk to somebody about a savings account. And they will be more than happy to accommodate you. And they typically see you pretty quickly. So they also mention here a certificate of deposit, which locks in your money for a fixed period of time at a rate that is typically higher than savings accounts. These are what's called CDs. This is kind of an investment because you're giving them a certain amount of capital, you're giving them a certain dollar amount, and that dollar amount you cannot get back immediately. You're actually kind of surrendering this to the financial institution and saying, I want you to hold this and grow it for me. And they assume that burden. So if you choose to try and take that out before its maturity date, or the date that it would have grown to a certain amount, then usually you're not going to receive any incentive from that. It would just be equal exchange of what you handed over and just getting that back without any of that growth. So also keep that in mind. It's kind of like bonds are the same way. From what I understand, I could totally be wrong. Again, I am not an expert on this stuff, but these are just some things that they are putting out for consideration for your short-term goals. And for your long-term goals, they are recommending FDIC-insured individual retirement accounts, so your IRAs. And they mention here tax-efficient savings accounts. When you talk about things regarding taxes and whether or not money is before tax, after tax, those things depend on the type of account that you have, and it also depends on the type of investment that you are making in those particular accounts, whether or not the money that you put into it is or is not tax liable or taxable. So keep that in mind. If you are putting money into an account that is non-taxable or before tax deductions, those help you at the end of the year. Remember that, because that's money that's actually taken away from your annual income, and the government says we can't charge you taxes on this money because it was taken out before taxes were applied to your pay. Those are the things that reduce your annual income, and those are the things that will help you when it comes time to get your tax return. Those are the things that can actually boost the amount of money that you get back in taxes from the government for what's been taken out of your paycheck all year. So if there are things that are before tax deductions, take advantage of those whenever you can. And then they also talk about securities such as stocks or mutual funds. That's exactly what we're going to get into starting on Monday. And you don't have to pick just one account. Look carefully at all of your options and consider things like balance minimums, fees, and interest rates so you can choose the mix that will help you best save for your goals. Now, that's also very important. Just like they say not to put all of your eggs into one basket, it's not a bad idea to have multiple accounts for these types of securities. Specifically, when we start on Monday with the actual trading and investing, where I'm going to show you from my own personal investment account, which is not looking terribly good right now. Again, like I said earlier, I am 150% not worried about it, just because I've got a pretty good idea of why it is below what it was, and I'm pretty confident as long as I hold out that it's going to come back up. And we're going to talk more in depth about that at a later time as well, for sure. I have learned some hard lessons, and I'm very likely going to show you what those lessons were by repeating those things all over again, starting from zero. Because that is my intention, is I'm going to have specific things that I invest that particular $20 to $60 into every week, and those are the things that we are going to track outside of what else is in my portfolio. So the other things in my portfolio, when you see it, you can ignore them because they have absolutely nothing to do with what we are going to attempt to accomplish, what I'm going to actually try and do. Now, make saving automatic is what they recommend. Kind of considering a savings account deposit like another bill. You're giving yourself another bill. Tell yourself, under no circumstances should you skip a payment into this particular account, because if you don't feed it, it's not going to grow. And that's going to be very true for your investment account if you choose to open one as well. If you don't feed it, it's not going to grow. You can't immediately assume that the things that you do with an investment account are going to provide you with an immediate return that is going to be substantial. You just can't do it. There's no way for any of us to tell the future. You could get lucky, but if you got that lucky, you may be gambling, and that's not what we want to do. So number 8 is to watch your savings grow. And this is another thing about investing in stocks and in the stock market, is your investment account, your brokerage account, that account is a savings account. That's the way you should look at it. Whatever money you put into it, you shouldn't have an intention of pulling it out anytime soon. You should be looking at the prospect of reinvestment or making secure, sound decisions in order to build a stable portfolio. That way, you're at a lower risk. Again, those are all the things that we're going to talk about moving forward on Monday. Now, those are the 8 tips from Bank of America for money habits. And again, this is a bank. They have a vested interest in anyone saving money, especially their account holders, because that money could be in your account that they could be using to invest and grow their financials as well. So, in addition, what we want to do is we want to prepare ourselves for whatever might come up, especially if we're going to talk about investing. If we start investing, what we want to do is we want to make sure we're prepared. And in order to prepare yourself, if you choose to invest, and this is, again, my portfolio right now, in real time, during market hours, which it makes me a little sad, because earlier today I had gains and then they went down again. I was up a little bit, almost recovered my losses, but then it came back down. But that's the game. Now, what we really want to focus on, though, is the account itself. So I've got all this red here. These are all of my losses so far. The way that I have my view set up in my portfolio in Robinhood is my total gain and loss. I could change it to the percentage change, and I can see that one of them is actually up by 5% today. Or I could actually take a look at the total amount of money that I have invested in each of these particular stocks. So right here I've got almost $2,800. The one directly underneath it is for $496. That's the total amount of value for those shares currently. That doesn't mean that's what I paid for it. For example, that one that's $495 right now, I actually paid more, $2.19 per share. Right now it's $1.66 per share. The value is $496.50 right now. And my total return is, I've currently lost $160 on this. And that's going to change. It's going to fluctuate. It can go up, it can go down. I don't know what direction it's going to go in ultimately, but what I can do is I can find information that will help make an informed decision on whether or not I do or don't keep this, if I decide to take the losses that I've sustained and walk away from it, or if I'm going to hold on to it for longer and see if it does come back up to what I have already spent, and see if I get that 160 back, if it goes up over that, and then I actually end up with gains. That can happen, and there's information that I need to find in order to support that before deciding on whether or not I'm going to keep it, sell it, buy more of it while it's at a lower price, because that can also bring my average down. And if I can bring the average down, if I bought more shares at this $1.66, I paid almost $2.20 for it. That's a difference of 54 cents. I have 300 shares of it right now. If I bought another 300 where it is right now, then I could actually close that gap from 54 cents to 26, 27 cents. And then all it has to do is go up over $2 in order for me to get a gain. We'll talk about that later too. Now, General Electric, I'm seeing a loss there right now. And this is something that we'll talk about later too, because it is kind of a complicated thing when you talk about these, what they're called ETFs, or indexes. So those are some things to keep in mind, that those are kind of a different animal. And then I've got this thing down here showing I have $840 in it. I have 2,349 shares of it. It's actually 36 cents a share. That's why I have so much of it. That's why I bought so much of it. This particular company, there was a reason that I did buy it based off of some specific research, and that's going to be an important thing to understand, is how to actually look at the information that you need in order to make an informed decision. And you can also set this by the last price in the market, or the total percentage change. Now, I like this particular view myself because it lets me know exactly how much over or under I am for each one of these particular items. So, why am I bringing this up now? Because this is not the only account that I have. I also have an account with WeBull. Now, WeBull is actually younger than Robinhood. They only just celebrated their second anniversary of being a brokerage platform. Much like Robinhood, they don't charge any fees or transaction fees for selling or buying stocks or shares. And Webull will also give you a tremendous amount of information. Now, on the upside, they give you a lot of information that you don't get from Robinhood. On the downside, it is very, very intimidating. It is very complicated, and it takes a lot of patience to learn how to navigate this particular platform. But what they do offer in this platform that Robinhood does not is an option that you see right here, and you should see a cursor on the screen. It's harder to see in Robinhood because of the white background, but here, because of the black background that I have, it's a lot easier to see. This is called paper trading. Now, what paper trading does is it gives you the ability to simulate buying stocks in the market before you spend your own money. It is a simulated account that has $1 million that you can play with in the market. This is not actual money. This is only a simulation, but that simulation is based off of real-time stocks, exchanges, and actual fluctuations in the market, whether a stock goes up, whether a stock goes down. This is actually following the actual stock based off of what I said I wanted to spend on it when I did. Like this stock, I only went in here just for the sake of example to show everybody. 500 shares, spent $13,485 on those 500 shares. And I paid $26.97 for each one of those because this is fake money. It's not real. It's a way for you to learn how the mechanics work in their platform and how to make purchases, make limit purchases or limit buys, how to use stop loss, how to use a number of different tools before you start using your real money. In addition, Robinhood will give you one free share. If you use my referral link in the description of this video, you can get one free share from Robinhood once you open your account. WeBull, which I also have a link for in the description of this video, will give you 2 free stocks. 2, not just 1. They will give you 2 shares of something. The first one would be at a certain value that is kind of around the same area as Robinhood. The second stock would be between $12 and $1,400 after you make a $100 deposit. But you have to make that deposit within 30 days of your account being approved. It also takes a couple of days for the account to be approved in WeBull as well, but they do have that incentive. If you use my referral link in the description of this video, then you can get up to 2 free stocks from WeBull. And WeBull, like I said, has a lot more flexibility than Robinhood and a lot more tools and a lot more information than Robinhood. But it is also very difficult to navigate if you're not used to what you are seeing. And that is very important to understand, is knowing your limitations. Can you read this information? Can you decipher this information? Can you make heads and tails of it? Do you know how to look at these charts, these graphs? We're going to go over all of those things, I promise. And we're going to do it at a slow enough pace that I hope will be easy enough to understand, not just for anybody watching, but for myself as well, because I am still learning. I only began making actual trades within the last few months. Again, since April 19th is when I started making investments. And that is not a joke, it's not a fib. That is actually when I started making serious investments for trading and looking to get gains. So, having more than one brokerage account, though, is a very good idea, just because there's always a possibility, there is always a chance that what you use primarily may not be available during specific times. There could be a problem with the app, there could be a problem with the platform, there could be some type of an issue with software somewhere that prevents you from being able to access your account. If that happens, you may not be able to buy the things you want to buy. You may not be able to sell the things you want to sell. The worst thing in that is that you might not be able to sell the things you want to sell. There's a way that you can potentially protect yourself from that, and we'll talk about that also come Monday. But the best way to protect yourself overall is to have more than one account, because if you can't access one, you will likely be able to access the other. And both Robinhood and WeBull offer you free stocks to start, which does help. Because you don't have to keep those stocks. You can sell them after a few days if you want to. So that could potentially give you some starting capital if you're interested in making actual investments and trades. It's something to consider for sure. Now, like I said, the goal in my presentation is going to be focused on making investments with as little as $20 to $60 a week, okay? I am not telling anyone that they need to go and get this specific app, WeBull, and deposit $100 just so they can get those 2 free shares. I'm going to make that absolutely clear, okay? There is nothing, absolutely nothing telling you to do that. And anything that I may or may not go through these apps and look for and buy, these are not recommendations. Okay? This is me blindly going through whatever stocks I could find and deciphering from what little information I can gain whether or not I want to put my own personal money into that stock and watch it either grow or potentially disappear. And I'm doing that at my own risk. There is absolutely nothing that I am suggesting to anyone to endorse any specific thing that I look for or intend to purchase or research. And in addition to that, I also want everyone to know that I am not grounded in morality when I'm looking at these particular stocks either. So if I happen to purchase a stock that is based out of China, for example, that has absolutely nothing to do with a political belief or a particular stance on a company or anything like that. So I don't want anyone to think that there's any kind of partiality or favoritism, because with the limited amount of money that I'm going to have available to myself, that I'm limiting myself to for the sake of this project, I can't afford to be very picky if there's a possibility that it might be beneficial in the short term. And we're going to talk about that more on Monday as well. So Anybody who watched our introductory video, when I said Tesla was over a certain amount, that amount grew. And they are expected to go up higher as well, but we don't know that for sure. Because they've gotten as high as about 1,800. Already. So, that was Tesla. I also mentioned Amazon. They're about the same range of over 3,000 a share. Now, I also need to make everyone aware that my Robinhood account is going to have certain features and certain pieces of information that are not going to be available to a first-time new user, because I do subscribe to their gold level at this point, because it gives me some additional information. So I am not going to reference that information to begin with. I am going to go right back to how I started, and I'm going to use what very limited information I can find inside of Robinhood, because Robinhood does have a much friendlier user-based experience. It is much easier to navigate. It is so much simpler to absorb the information that it has versus a platform like WeBull. So understand that as well. Now, just to show you this right here that you see at the top that says options. Options are not, I repeat, not something anyone should try using, looking at, investing in, buying, selling, unless you have an absolute intimate knowledge of how the stock market works. This is not something for a novice user. It's not even for me. To be completely honest with you, this is not something I should even be doing. But these particular options that I have in my account right now for General Electric and Prospect Capital, that's what those codes mean. The one on the top that says it's under $4 from what I put into it, and the one that's underneath that says that it's plus $3 from what I put into it. Those options I did not buy with the intention of selling. I actually bought these options with the intention of exercising them. So I want everyone to understand that too, because options are a very, very quick way to lose all of your money if you don't know exactly what you're doing. And again, I only got these particular options for my own personal interest to use them myself. But you should not, absolutely not, click that button that says options until you have a intimate knowledge, and I mean incredibly intimate knowledge of how the stock market works, because it is a very, very complicated, very, very dangerous and high risk way to invest your money. Because all you have to do is guess wrong. And if you guess wrong, that money that you spent on that contract is gone. There is no waiting to see if it goes back up. There is no waiting to see if it goes back down. It's gone forever. So be very careful when you set up your account. Now, if you don't already have an account with someone, I do recommend Robinhood or WeBull for a new user. Again, those links are in the description. Those will get you free stocks. And that's better than starting with absolutely zero. Now, if I didn't mention earlier, WeBull gives you the first stock after your account is approved. So even if you set up an account with them, you got your account approved, there is no requirement for you to make a deposit to get one free stock. Just like Robinhood, there's no financial obligation to set up your account with Robinhood or with WeBull. With WeBull, they just make it much more enticing by saying deposit $100 for a second stock that would be worth more than your first stock. And in addition to that, if you do, see, it's telling me right now. In addition to that, if you do deposit $100 into WeBull, it doesn't mean that you have to invest it right away either. You could actually just let it sit there. You could let it sit there, and after several days, once it is cleared, because it takes about 5 days for it to actually clear for you to get that free share, then once it's settled, you could actually just withdraw it right back out and put it right back into your checking account if you wanted to. And you didn't invest it anywhere, so there weren't any gains, there weren't any losses. It was just the money that you put in and then pulled back out. That's always an option that's available too. As long as you just make that first deposit, that's all they care about. There's nothing else that says you have to invest that $100 right away. That's not how they operate. So keep that in mind. And as much as I know everyone would love to sit and watch these numbers either grow or fall with me right now, I am going to leave you with the information that I've already provided, and I hope that it will be useful to somebody. Again, I'm doing this because I couldn't find any information that would help me when I started, because everything seemed to suggest I didn't have enough money. So I'm doing this for anyone and everyone who felt the same way I did. And that is exactly why I'm putting my money where my mouth is, and using my own money and my own account to make this project happen. But it is 100% honest when I made the title of this video, Make Money Doing Nothing. Because if you just stopped going out and eating out or spending money on things that you don't really need, you're really doing nothing and you're saving so much money. And hopefully those tools will help you put aside $20, $40, $60 that you can put towards an investment every week or every month, or whatever you're comfortable with. But with that, I hope everybody stays safe during this particularly trying time. And just remember that we're not alone. But also, because of everything that has happened, I'm going to switch over to WeBull here. And I'm going to show you exactly why I chose to start putting money into the stock market at this time. And it has to do with this. At the beginning of March, the stock market had a substantial fall. And because of that, the value of a large number of stocks have become increasingly more affordable than they have ever been before in our lifetimes. So you could technically think of this as a clearance sale on stocks for companies that you could only dream of owning pieces of before. And if I go over to Robinhood, one of the first things I began looking for in any stock was a particular time frame. And that time frame happened to be right here. If you can see that date, February 27th to March 5th, and then March 5th to March 12th, these are the specific dates I'm looking for with minimal cost stocks. Because this is American Airlines. And their stocks were about $30 a share, between $27 and $32 a share, before the COVID-19 crisis. If we look back historically at American Airlines, they actually have a pretty healthy history as far as the cost of their stocks. And then when the pandemic hit, they went as low as $9 a share. Their actual lowest point in the last year was $8.25. Do you think that there is any possibility that they could actually go back up to what they were when the airline industry starts getting back in the air? Having more regular passengers, more routes. This is exactly why I decided to start when I did. So, with that, as my account starts to nosedive and go lower, and I say to myself, it's okay. Which, yeah, I'm totally fine with this. I bid you all adieu, and I do hope to see someone tuning in on Monday. And we are going to start with some daily streams beginning on Monday, August 3rd, from 9 a.m. until 10:30 a.m. Eastern Standard Time, because the stock market is always based on Eastern Time. So keep that in mind. And we're going to say goodbye to Happy here. But guys, this is Blind Beginners Investing, and we look forward to sharing this